situation gets worse. Sell a home you can't afford or just need anymore and get the cash you need today. Call this number now.
Call 800-527-4903. That's 800-527-4903. 800-527-4903. Again, 800-527-4903.
Paid for by Airtime.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled The Complexities of Inherited IRAs. Mike, a lot of this complexity started at the end of 2019. What are we seeing now in terms of how inherited IRAs are treated today versus how they were treated before?
The biggest change is for people other than a spouse, and I'm going to overly generalize here, but as a rule of thumb, if you are inheriting a retirement account from someone other than your spouse, most likely you are going to need to empty that account within a 10-year time period and probably take a required minimum amount every single year, although the IRS has been willing to waive that since the rules were changed.
Now, as you mentioned, they've waived that each of the last 4 years, but there's no guarantee that they will in the future. Is it worthwhile for investors to talk with their tax professional and advisor to figure out what the best plan is to minimize taxation over that 10-year period anyways?
I mean, even if they don't waive the penalty, even if you do have to take a minimum amount, you should be planning this, right? Because if you just wait, then you might end up being surprised at the end of year 10 when all of a sudden I've got this massive account to withdraw and I have a whole bunch of taxation to realize, and it starts impacting everything from my Medicare premiums to my capital gains rates to everything under the sun.
The guide this month is titled The Complexities of Inherited IRAs, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number again is 800-393-4001. Or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute
is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker here, and we continue to get a whole bunch of economic data out this week. This morning, ADP. What does ADP stand for?
Something payrolls?
No,
American something payrolls?
I'm going to take
American data processing?
Probably. That sounds right. But ADP, which is
automatic data processing.
Automatic data processing.
Mine was more patriotic.
Yours was. Maybe they could do a rebrand and incorporate a little bit of blue into that logo, and there you go. But ADP reported their jobs numbers for the month of May at 8:15 this morning, and they showed 152,000 jobs added. That's compared to expectations of 170 to 175,000. So a miss to the downside there, a modest one, despite CNBC telling me, quote, I just have to pull this up because it was that significant that I even went to Mark and said, this isn't real. Quote, private payrolls growth slows to 152,000 in May, much less than expected. It's like within the margin of error on this, and I don't really know what we're doing here. But yet another data point that is coming in under expectations. Then we get the ISM Services PMI number that came out at 10 a.m. this morning, expected to print somewhere between 50.8 and 51, ends up printing a 53.8, so kind of throwing a wrench in this whole, hey, everything's slowing narrative, except the thing you got to remember about the ISM surveys is they're exactly that. They're surveys. They're what we refer to as soft data, not hard data. And the soft data has not been that reliable this business cycle. It's been something where we've talked for the last 2 years about how the ISM manufacturing data is just not coherent with the rest of the economic data that we've been getting. ISM services have been a little bit more reliable, but again, this is one print for 1 month, and all of the other data is kind of pointing in the opposite direction. So my personal choice is, in looking at kind of the mosaic that you build of, hey, this data point and that one, you say, okay, it's a positive one, but there's nothing else reinforcing it. Let's discount it until proven otherwise is kind of how I would approach something like this.
The Fed started tightening 2 years ago, a little over 2 years ago. It stopped tightening about a year ago.
Yep.
Fed funds has been at 5.25 now for a year. The consensus among researchers is that it takes a few to several quarters for those hikes to work their way through the economy. The mechanism through which the Fed affects demand is interest rates, as we all know. So we've all been waiting for the slowdown.
Here's the question that I think is worth asking then. The stock market and the bond market are telling us two different things at the moment. The bond market in the last few weeks has seen the 10-year Treasury go from 4.6 down to 4.3, which is saying, yep, there's a slowdown coming. It's probably going to take inflation down with it. That's what we're hearing there. the stock market, which, to put words in your mouth, I believe you often refer to it as the best leading indicator of the economy. Is that a fair statement?
No, I would never say anything like that.
You did say
it's my personal favorite because of the frequency. It's constant, whereas some data series are monthly.
I thought we were talking like a month or two ago, and you asked me
if I had to pick one.
You said if you had to pick a data.
That's different than saying the best, though, Chuck. That's just saying my personal preference, probably because of my finance bias, is I'd go with the equity market.
So what's the best predictor of the economy?
It depends. These relationships are unstable. I'm not going to give you a straight answer to that question. I'm going to weasel out of it.
But your
relationships are too unstable. Stocks are among my favorites. They're pretty reliable. A lot of false positives, but they're as good as anything else. And again, they're really high frequency. People are voting every fraction of a second in real time.
So here's the question: is stocks, despite the data slowing in the last couple of weeks, the S&P 500 has been plateaued right around 5,300 since May 15th. Got up, it crossed that threshold for the first time on May 15th, and it's been sitting there just saying, hey, not really budging much. I think we moved maybe like 0.5% or almost 1% down intraday at one point. But it's just kind of sitting there saying, okay, we're not budging despite the slowdown that we're seeing in data. And I think it's an interesting question to try to interpret what the stock market is telling us versus what the bond market is telling us, and we don't inherently know which one's going to be right.
Yeah, there does seem to be a disconnect. And are stocks paralyzed, sort of deer or rabbit in the flashlight or headlights, whatever the right analogy is? Sense? I don't know. My sense overall is that the data, as you point out and as you guys cover every day here, is pointing toward a slowdown. You don't have to be a keen researcher to have noticed that GDP in the first quarter, annualized, was a lot slower than in the previous couple quarters.
Now, the question on this, when we talk about a slowdown, the question that everyone wants to ask is this going to be the recession? Is this going to be the big one, Mark?
It's the right question to ask. Like, you get a little chest pain. You're like, oh.
It is, but everyone's just so anxious to ask it. Is that the Dr.
Pepper I just had, or is it worse?
Everyone's so anxious to ask it.
Yeah, I think that's been the case my whole adult life.
Has it?
Yeah.
So it's not just I feel like in the last 10 years
Again, I've worked
in
finance. I've worked guys who have real jobs. Not to diminish what we do, but
you can diminish what we do.
We move stuff around. I mean, people who have real jobs aren't distracted by every blip in the markets day to day. But yeah, we've always overreacted and tried to read as much as we can into data with arguably limited usefulness. It's pretty normal.
So the question is, where does the economy go? And then the follow-on to that is, well, what does that do to stocks and bonds? Because that obviously is the thing that a lot of people want to know about.
There is a difference between slowdowns. Could you elaborate on slowdowns versus recession? We're talking about
Sure. Slowdown is what we went through in Q3 of last year, where economic growth slowed. There was a question of, hey, is this going to take us into a recession where economic growth is actively contracting instead of just growing at a slower rate? And ultimately, we didn't end up in a recession then. Now, you always get these questions as you head into a growth slowdown. Is this just going to be a slowdown for a quarter or two, or is it going to be a larger recession? And I'll give my take on this. I think that a recession by Q1 of next year is possible, but I struggle to see it being a deep recession for one simple reason, which is that in a recession, if you were to get one, the Fed typically is very aggressive in cutting interest rates, typically anywhere from 2 to 4%. You see are the interest rate cuts that normally accompany a recession. When that happens, longer-term rates like the 10-year Treasury tend to fall not as much, maybe anywhere from 1 to 2%. And the thought exercise that I go through is just, hey, if the 10-year Treasury falls, that brings mortgage rates with it. How much housing activity is unlocked with mortgage rates in the high fives? And my answer is a boatload. I can't say the word that
well, hold on. It depends on the state of the economy. If people are fearful for their jobs, that's not going to be the case. I can tell you 2008, 2009, despite falling Treasury yields, was not a heady time for housing, as you know.
The key difference there, in my opinion, is that the levels of home equity now are massively higher than what you had back then.
Fair enough.
And this is something where if you have interest rates coming down, 1 to 1.5% from here, hey, you've got a lot of prospective buyers that are willing and able, even if the economy is slowing, in my opinion, to provide some ballast before it gets too bad. And I guess this is the other place that I'm going is, hey, even before you get to said recession, interest rates on mortgages right now, the 30-year fixed-rate mortgage, according to Mortgage News Daily, has come down from about 7.3% to 7.07% in the last couple weeks. At the beginning of the year, that rate was floating around 6.7 to 6.8, and we were seeing housing activity that was running 8 to 10% above last year's numbers. With rates up where they are now, or where they've been recently, you're now only seeing housing activity up 1 to 2% year over year. So if we continue to see the data slowing but not yet in recession, my view is that as interest rates on mortgages drop into the mid to high sixes, before that job loss happens, you start to see the economic activity pick up from lower mortgage rates. And that makes it challenging to have any kind of meaningful recession because of the economic activity generated there, both in terms of just home, purchases and sales, but also you get builders who say, yep, we're going to be more optimistic. We're going to start some new construction, and that's a huge, boost to the economy as well.
So the question is the economy going to slow enough to get inflation down to the Fed's target? Or stated differently, will an economic slowdown reduce inflation? I can tell you that if you define economic slowdown the way I've been doing it internally the past couple mornings, that doesn't help people listening.
No.
I just defined it as 2 consecutive quarters of growth lower than the previous quarter.
Sure.
And I was surprised to see in both stock returns and in the change in inflation, you get things going up just as often as you get them going down. If I told you with certainty we're going to have a growth slowdown in the next 6 months, should you sell equities? Absolutely not. I'm looking at a chart. You can't see it, but stocks have gone up more often using my little definition of growth slowdowns in the post-war period, and I found 10 such slowdowns. They're roughly when you'd expect them to be. Growth slowed, the Fed eased a little bit. Maybe that helped equities, but equities are just as likely to go down as up. Inflation, interesting, just as likely to go down as up during growth slowdowns as I define them here.
It seems like, unfortunately, on the inflation side, the only thing that we've conclusively found that can slow inflation is a reduction in employment. Is that an accurate statement?
Any economist would agree with that. Yeah, that's the way the process of inflation is modeled by economists. It's a function of overall demand, for which a proxy is unemployment. You could put the JOLTS number that we talked about yesterday, job openings relative to unemployed. You could put some other proxies as a stand-in for that. But yeah, Chuck, generally we've relied on economic slowdowns to reduce inflation. Just think about the experience of the early 1980s.
Let's take a quick break here, and when we come back, let's talk a little bit about Europe. We don't talk about the folks over there as often as we should, and so we're going to book ourselves for a little bit of imaginary travel to Europe to see what the economy looks like over there right after this.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019 and the more recent changes that have made things a bit more complicated. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and it's really important that you develop a strategy to deal with these changes to the law, or you and your family could face significant tax consequences in the future. If you've inherited money from your spouse, the process remains relatively simple. But if you're inheriting an IRA from someone other than your spouse, there are numerous issues that you'll want to be aware of to protect those assets. Call us right now at 800-393-4001 and ask for your copy of our new guide called The Complexities of Inherited IRAs. That number again is 800-393-4001, or you can also request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. Help us support these great American heroes by visiting dav5k.boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
The U.S. and Europe are on the same economic track after all. That's the headline in the Wall Street Journal. Is it accurate, Mark?
I don't think so.
I don't either.
I think it's more like two slowly moving trend lines, which is the right way, I think, to think about GDP, gross domestic product, how we measure output, that have kind of crossed each other. Just because we grew at the same pace in one quarter on an annualized basis doesn't mean we're on the same track. It is true if you look at the economic measures that we use to keep track of economic health. They're really flawed, but they do a good job capturing stories over long periods of time, like GDP, like inflation. The whole Western world, advanced Western countries that trade a lot with each other, that are rule of law based and stuff like that. And it's us in developed Europe and developed Asia, as you would imagine, and Canada, if I didn't mention that, if I didn't imply that. broadly speaking, we have common trends. GDP has gone up over time. Inflation has tended to spike at the same time because the big spikes are always due to shocks. You can't have excess demand-driven inflation forever. That usually wanes.
Sure.
Even in the 70s, we got a handle on it. So no, I wouldn't phrase it the way that the author of this article phrased it. But at the same time, there's I'll just call it a common trend to things like inflation and growth among economies that are similarly structured and that have a good amount of trade with each other. I'm being a little fast and loose with the facts there, so forgive me. But if that means that our monetary policies will be more aligned, ECB is expected to cut rates. Although I don't know why they would if growth is accelerating.
Well, and beyond growth accelerating, you're starting to see a little bit of an uptick in some of the underlying inflation metrics in the last month or two as well.
Right, yep.
And
Not
so
a
it probably looks like you're getting one cut from the ECB, and then now what do we do? Which is not exactly how you want to approach it, but they've kind of boxed themselves into where they need to cut now based on previous statements. And I think that when you look at it, the interesting thing that you do have here is the question of, again, in markets and economies, you're always looking for correlations and when they start to break down. And the one that you look at now is kind of, it gets at what you mentioned, which is, hey, these economies tend to track each other, in the long run here.
The broad trends, yeah.
If you've got the EU accelerating, but the U.S. is decelerating, how does that resolve? Because there's one of two ways it resolves. Either U.S. inflects higher, and you get more growth in the U.S., or EU inflects lower, and you get less there. So what is the resolution that you end up with on that? I think that's an interesting question to ask for the next 6 to 9 months in terms of the broader questions about inflation and growth and what direction do those resolve on a global level.
I mean, it doesn't really have to resolve. We could outgrow them as we have been outgrowing them over the past generation indefinitely if our productivity rate is higher and if our labor force growth rate is higher.
Which, look, ultimately, if you look at those two items, if you think the U.S. has bad demographic problems, the EU's worse. And the supportive aspect, the supportive piece of GDP in the U.S. has been, productivity growth that's been modest but still better than the EU. Does that continue or does it accelerate? It's possible. Along those lines, I do want to touch briefly on what we're seeing in the AI space, just from a productivity standpoint. It's starting to feel a little bit like the hype on generative AI is getting way out of control in terms of what you, again, if you can write or do pictures, make pictures and things like that, that's great. But how much economic activity is generated through making pictures?
Right.
Not much. You make a cool picture that you can put on, the header of a piece, and okay, I'd rather, how long did you spend doing that? Oh, I spent, 10, 20 minutes. Great. I'd rather be, talking to someone about a house I'm trying to sell because there's more economic activity that comes from that. What I'm getting at is I suspect that what we learn over the next year or two is not that generative AI is useless, but that its economic impacts in the short term are not going to be as high as we think it will be. And that's going to cause a bunch of spending contraction in that space that's going to bring a lot of those companies back down to earth.
It takes new technologies, and I'm going to generalize here because I don't have the facts on the tip of my tongue, but anybody who's read a little bit about economic history, you've mentioned Robert Gordon's Rise and Fall of Economic Growth, a very popular book written about 10 years ago. He nicely chronicles major what I'll just call technology breakthroughs, from steam to electricity and all the follow-on benefits that accrue to people and to the economy from those. And it takes decades for them to work their way through. It would be a little bit surprising. Even the internet took 20 years to find applications that were
right. At first, it was just dancing hamsters.
Yeah, I was thinking more like people at universities emailing each other in the early 70s to up to dancing. The highest form of internet use, dancing, hamsters, and so forth.
Let's take a quick break here. When we come back, we got Wall Street Watch and Ask Todd.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky with the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about the differences between revocable and irrevocable trusts. Todd, when would it make sense to use an irrevocable trust versus a revocable trust?
Yeah, so in this case, you really need to think about a couple of things. One, how much you're worth. Obviously, if you're worth, well over 4 or 5 million, 6 million, probably you're self-insured, so you're not so concerned about nursing home planning, and therefore the irrevocable Medicaid trust that we're talking about here might not be as applicable. But 4 million and under, folks are saying, and the other issue would be over age 60, let's say, and there's no rule of thumb, but 60, 65 is a great time to be thinking about protecting assets from the nursing home because it takes 5 years to do it. So if that's the case, then an irrevocable trust would make sense. And don't be put off by the word irrevocable, because you will find that the differences between revocable and irrevocable, at least these Medicaid trusts, is very, very few and far between. You're still very much in control. You live in your house. You enjoy your income. You manage your money. You buy and sell your property. It doesn't matter that it's irrevocable, so don't be afraid of it.
The estate planning experts at Cushing & Dolan have written a brand new guide that will answer the most common questions you have about the differences between revocable and irrevocable trusts. You can request this guide by calling 866-848-5699. That's 866-848-5699. Or you can also request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are mixed territory with a jump in the tech sector as investors continue to monitor the bond market and digest this morning's ADP private payrolls report ahead of a big jobs report this coming Friday. Right now, the Dow is off by about 0.25%, S&P 500 is up by about 0.5%, and the NASDAQ up over 1%. Russell 2000 is up by 0.25%. 10-year Treasury yield is down by 1 basis point, now at 4.32%, and crude oil is up by 0.5%, trading at $73.61 a barrel. Shares in Hewlett-Packard Enterprise jumping by 12% after the server and cloud software company posted stronger than expected quarterly results, where it saw sales of AI servers doubled to over $900 million. Meanwhile, cybersecurity firm CrowdStrike reported a climb in quarterly revenue and also hiked its annual guidance, setting that stock up by 6%. Elsewhere, Dollar Tree down by 4.5% after the discount retailer posted first quarter results that came in line with analyst forecasts. Separately, the Wall Street Journal is reporting the company is exploring a potential sale or spin-off of Family Dollar. Guideware software shares up by 17% after the insurance software specialist raised its annual outlook after posting better than expected quarterly results. And in major sports media news, the Wall Street Journal is reporting that the NBA is closing in on deals with NBC, ESPN, and Amazon that would bring in about $76 billion in media revenue over 11 years, citing people familiar with the discussions. Amazon up by about 0.33%, while Disney shares are off by over 1.5%. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
As promised, we are now joined by Todd Lutsky from the law firm of Cushing and Dolan. We call the segment Ask Todd because we open up the phone lines and you get to ask Todd your questions about estate planning. The studio number here is 888-205-2263. So get calling if you want to ask Todd your question about your estate plan. We usually only have the opportunity to speak with 2 to 3 people at any given show, so again, that number's 888-205-2263. Get calling early to make sure you get queued up and get one of those spots. That phone number again is 888-205-2263. Mr. Lutsky, how are you today?
I'm never better, and you?
Good. I'm in the middle of an experiment right now.
You're experimenting?
I ordered a chicken and an egg from Amazon.
Yeah?
I'll let you know.
Yeah.
I'll let you know.
Well, let me know. Yeah.
Todd, I want to talk a little bit about revocable trusts. I have a question for you on them. And specifically, it relates to the taxation of revocable trusts. Let's say that someone goes and does trust planning and chooses to utilize revocable trusts. How does that impact their tax situation on a yearly basis?
And there are many differences between these trusts, and there's many similarities. But let's talk. This one is just about the revocable, correct? So on the revocable trust, do we have an income tax, I believe is the question, an income tax difference?
Yes.
So when you put assets in these trusts, that could be owning something like, just so you understand why this is even a question, you're going to be funding this trust with something like an investment portfolio, bank accounts, maybe a rental property. And so those assets that are now owned by the trust are generating income, interest, dividends, capital gains, or rent. Well, that income needs to be income taxed to somebody. Well, if it's owned by the trust, the question is who's paying the tax? So when you title assets to a revocable trust, those investment or bank accounts will have a tax ID number equal to your Social Security number. So now that you know it's in your Social Security number, you can ignore filing any income tax returns for the trust and just keep on filing your own income tax returns, that being your 1040. And so, long-winded answer to say, there is no change from an income tax perspective when you have a revocable trust.
What if you are utilizing an irrevocable trust designed to protect assets from a nursing home? How does that impact the income tax situation?
And that is critical because there's many kinds of irrevocable trust, which is what Chuck's alluding to, right? So you got to check the kind of irrevocable trust you have. And for income tax purposes, it matters whether that trust is a grantor irrevocable trust. What that means in English is that you, the creator, are still the owner for income tax purposes. So when you set up an irrevocable, we'll use Medicaid trust, as you mentioned, Chuck, and you put in those brokerage accounts or that rental property, the brokerage account now will have an ID number given to it because the trust will have its own ID number. So once the trust gets its own ID number, the IRS will be looking for a tax return for that ID number. However, if it's a grantor trust and this trust earns interest, dividends, and gains, whether it's distributed out or not, because it's a grantor trust and you're treated as the owner for income tax purposes, it will get picked up on your own personal 1040. So in English, yes, there's a little difference. You have to file an extra return for the trust. It's called a trust return, but it pays zero tax and everything flows through to your personal return.
Talking with Todd Lutsky from the law firm of Cushing Dolan. We call the segment Ask Todd because it's your chance to ask Todd your questions. Still have room for another person or two on the phone lines. That number is 888-205-2263. That's the number to call to ask Todd a question live on air. We're going to take a quick break, but when we come back, it's right to your phone calls. That studio number again is 888-205-2263. Quick break, right to your phone calls when we return.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019 and the more recent changes that have made things a bit more complicated. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and it's really important that you develop a strategy to deal with these changes to the law, or you and your family could face significant tax consequences in the future. If you've inherited money from your spouse, the process remains relatively simple. But if you're inheriting an IRA from someone other than your spouse, there are numerous issues that you'll want to be aware of to protect those assets. Call us right now at 800-393-4001 and ask for your copy of our new guide called The Complexities of Inherited IRAs. That number again is 800-393-4001, or you can also request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing and Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
All right, it's time to get right to your calls with Todd Lutsky. First up, we've got Tom on the Cape. Tom, what's your question for Todd?
Good morning, gentlemen. How are you?
Great.
So it's in regards to my aging mother who's now in assisted living. She had gifted us the maximum or whatever, I think it's $18,000 or $18,500, whatever it is, the state of Massachusetts. Does that look back pertain to a gift also, or is it strictly just for her assets?
Yeah, so a great question. It's confusing for folks. This is when you're thinking about protecting assets from a nursing home, right? First of all, assisted living is going to be private pay. She would need to, decline and need further help to be in a nursing home in order to get eligible for Medicaid. But a look back is a 5-year look back for, and I'll just give you the definition. Anytime a person takes any asset and that was formerly available to the nursing home and puts it somewhere where it's no longer available, you create a 5-year waiting period. Forget the amount for the moment. So this $18,000 number you're discussing is confusing for people because for gift tax purposes, you're right. It's a freebie. You don't need to file a 709 gift tax return, and you don't need to pay any gift tax, and you don't need to report it anywhere. It's $18,000 per year per person. That's for IRS gift tax purposes. For Medicaid eligibility purposes, completely different rules. Every penny you give away creates this 5-year waiting period. So that 18 is still going to create a 5-year waiting period for each person that they gave it to. So hope that helps a little. But, these are the kind of things that are confusing to people, and maybe the better approach for Tom's mother at this point. Again, she's still in assisted living and maybe has an opportunity to do some planning. Figure out whether a revocable or irrevocable trust is right for you. That's what this guide does. It's new for the month. It helps you, if you haven't done your planning, learn what the differences are between the two. And if you have done your planning, maybe you want to switch. But here, more importantly, it talks not only about the income tax gift differences, which is what Chuck asked me about earlier, but are there gift tax differences? What about the estate taxes? Do they do the same thing? And more importantly than all that, how does it work day to day? What can I do with assets in there? What can I not do anymore with assets in there? It really will clear up one of the most frequently asked questions there is. call and get the guide, differences between revocable and irrevocable trusts, 866-848-5699 or legalexchangeshow.com. One more time, 866-848-5699 or legalexchangeshow.com.
Todd, I got another one here for you. We've got Lori in New Hampshire. Lori, you are on with Todd Lutsky.
All right. Thank you. Hi, Todd.
Hi.
I just have a question. My husband and I are in our young 50s, 52, 53.
Mm-hmm.
We have a lot of money set aside for retirement, probably close to $1 million.
Mm-hmm.
We have a lot in our checking and savings account.
Mm-hmm.
I don't know if we should put everything in a trust. We have property, probably 27 acres.
Sounds
so
nice.
I don't know if this is something that we should look at to put in a trust.
Do you have kids?
Yes, we have 3 kids, and we do have a will, and it's set up that it'll be whatever happens to us.
Are the kids minors?
22, 19, and 15.
So one minor, so that's important. So just listening to what you're saying, you have the will, which is basically not an overall estate plan. Some people think it is, but it's really not. And so for someone in your case, mid-50s, early 50s, you're looking like you say you got $1 million in retirement. You probably have who knows how much more in bank accounts. You got 27 acres, a house. You start adding up all that stuff, life insurance, you're probably well north of $2 million in total value of your estate. Would that be fair to say?
I think so, yes.
Yeah. And so you need to start thinking about estate taxes, one, because you've now exceeded your estate tax exemption threshold in Massachusetts. So that's $2 million. But by doing basic trust planning, we can eliminate that up to $4 million. We can double that. So if you're under $4 million with a basic trust, we can eliminate taxes, number one. Number two, we can avoid probate so your children don't have to go through all that nightmare. We keep you in charge of everything because I think a revocable trust is probably in order for someone in your situation, your age group. I mean, I don't think we're worried about nursing homes quite yet. And the other big thing to think about is you still have a minor child who can't own anything. So if you happen to die before that child reaches majority, they can't own real estate, they can't own investments. So you want to put it in a trust for them. And so and even your other kids, with your size of your estate, you might not want to just leave things outright to them yet. You might want to control it for how they get it and when they get it through a trust. So I think you are in absolute right order to do a plan of some kind, probably a revocable trust plan, a joint revocable trust will work. And you know what? That's exactly what this guide is about, folks. It's about revocable versus irrevocable to help you decide which way is right for you. So hopefully that helped you out.
Todd, I've got one more for you here. We got a couple minutes left. Let's go to Mark in Falmouth. Mark, what's your question for Todd?
Hello, Todd.
Yes.
Hi. Todd, I've got 2 properties, both of them in an irrevocable trust. Both of them have passed the 5-year look-back period.
Okay.
Getting ready to retire. We want to sell the primary residence and tear down the second cottage and rebuild it. So my question is we have money outside the trust that I'm going to put into the cottage to rebuild it. Will putting that new money in to rebuild the cottage, will that start my 5-year look-back on that by introducing those funds?
So the quick answer is yes. If you take money that's not in an irrevocable trust now and put it in an irrevocable trust, you will create a new 5-year waiting period, but only for the new money. Okay, so it's not going to start a new 5-year waiting period for the 2 properties that are already in there. Now, what I might suggest, and again, so that's really good news at the end of the day if there's no other money in the trust. What I might suggest, and what I heard you say is, I might be selling the primary residence that's in there. And if you sell it, the trust can in fact sell it. It should provide no adverse income tax consequences to you, meaning you'll still get your capital gains exclusion. But more importantly, you'll now have money in the trust, and the selling it is not going to start a new 5-year waiting period on that asset. So now you have money in the trust. Maybe use that money to fix up the property that you were talking about putting money in the trust to use to fix up. If you can swing it that way and do it that way, then you don't reset the clock at all. That said, if you have extra money outside the trust that you would like to protect anyway and you're not really old yet, then maybe you put more money in and get your 5-year clock started. So now you've protected the 2 properties and even some extra money along the way. But those are the kind of things that you need to think about when you have it. But I hope everybody listening heard how flexible an irrevocable trust can be just from this question.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing & Dolan right now at 866-848-5699 and get their brand new guide called The Differences Between Revocable and Irrevocable Trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today, 866-848-5699. That's 866-848-5699. Or request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Still a lot to come as we continue through the financial exchange, including the story from the Wall Street Journal about how Americans have more investment income than ever before. We'll also talk a little bit about the job market and recent trends in commutes. A little bit of chatter about adjustable rate mortgages and whether or not they pose a problem for the U.S. economy. And then we're also going to talk about Bill Ackman after this because, gosh, we just should. Let's take a quick break here. Hour 2 of the Financial Exchange coming up in a bit.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston, the Money Matters Radio Network.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide this month titled The Complexities of Inherited IRAs. Mike, with how the inherited IRA picture has changed in the last few years, one of the things that a lot of people need to consider is how to minimize taxation, not just across their own lifetime, but on a multi-generational basis once they're gone.
Yeah, and quite frankly, prior to these changes, IRAs were often used, especially Roth IRAs, as a kind of multi-generational inheritance plan. And these new rules have completely changed that, like I said, for most beneficiaries of retirement accounts. And so a lot of the planning that was done prior to 2020, if not haven't been looked at again, just might run contrary to your entire thoughts of what you did before these changes.
It seems to me that it makes sense now you've got to consider the tax situation, age, and other characteristics of your beneficiaries who might not be spouses when figuring out who to name on your IRAs.
Yeah, not only that, and a lot of that stuff was considered prior to, but maybe you've got two kids with vastly different income situations. Do you consider naming one the traditional versus the other the Roth beneficiary in order to minimize total taxation across generations? These are complicated issues that I know it might sound like just applies to a small subset of Americans, but most people these days have a retirement account.
Our guide this month, again, it's titled The Complexities of Inherited IRAs, and the two ways to request it are by phone or online. Website is armstrongadvisory.com, or you can call 800-393-4001. That website, again, is armstrongadvisory.com, or the phone number is 800-393-4001. The
proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating a trust is oftentimes the first step in the estate planning process. It helps you prepare for the unknown as well as the inevitable. Revocable and irrevocable trusts are the most common types of trusts, but there are significant differences between the two. So before you make that crucial decision, call Cushing Dolan at 866-848-5699. Ask for their new guide called The Difference Between Revocable and Irrevocable Trusts. Let them help you understand which may be right for you and your family and protect the wealth that you've achieved throughout your working years. Protecting your assets is paramount to being able to enjoy your retirement years, so call right now, 866-848-5699, and get your free guide today. Give yourself the peace of mind you need as you build your estate plan. Again, that number is 866-848-5699, or request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com.
Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Little bit after 11 o'clock on the Financial Exchange. And we got the Dow is the only major index in negative territory right now. It's down about 40 points. The S&P 500's up 30, and the NASDAQ up 198. So the NASDAQ surging ahead here. We got the 10-year U.S. Treasury down 3 basis points to 4.3%, continuing to move lower over the course of this week. Oil, West Texas Intermediate, up 38 cents a barrel after a few days of pretty meaningful drops. The AAA National Average for gas prices down 1.5 cents to $3.50 3/10 cents. So you've seen gas prices come down about 17, 18 cents in the last month or so, which is obviously nice. And based on where gas futures and oil futures are, you're probably getting down somewhere into that $3.40 range nationally in the next week or two. So there's still more room to run to the downside here. We've got gold. The yellow metal is up $20.80 an ounce today to $23.68 20. And in crypto world, Bitcoin back over 70,000 today. Not that I particularly care, but there are those who do, and so I like to report big round numbers on stuff when they happen.
It's really got a mind of its own. I mean, it's not.
You're saying it is artificial general intelligence, AGI, if you will.
I don't know if crypto represents any kind of intelligence.
That's the kind of pun I was looking for, Mark. Thanks for
I struggle with that because there are people much smarter than I am making a lot of money and doing interesting things.
Totally.
In crypto. I just find it hard to accept that it is an it should be considered an investment asset class on par with stocks and bonds and other things. That is a different topic.
I'll disagree on part of that. I don't find there to be many interesting things being done in crypto at this point.
Oh, I don't know enough. I just thought I would throw that out there sound balanced.
For something to be interesting in crypto, it has to get some kind of adoption, actually, like mainstream adoption.
It still doesn't have that.
And I keep hearing about I keep hearing about the interesting use cases where, you can use this for, closing on a house, and that way you don't have to have, notaries and this and that, and, red. Okay, when am I going to, buy a house and have it recorded on the blockchain? Until these things actually start happening. I mean, we've been talking about crypto for a while now. I mean, I remember the first crypto bubble back in, what was it, like 2017 or 2018, I think it was. Then there was a second one in 21. They're kind of every like 3 to 4 years they pop up at this point, it seems like. And I remember all the hype back in 2016. It was, you're going to be able to use it for this and that and this.
Mm-hmm. Yeah, none of it's panned
What
out.
can I use it for except for gambling in the Wall Street casino and paying ransomware?
Right. Yeah, beware of hype. You
Tesla doesn't take it for cars anymore. They did for a while. They don't.
Yeah, there's a lot to be said for just being a wet blanket all the time, which suits me well, but it's helpful in finance, especially when you're directing the investment of other people's money. You should be skeptical. We talked about AI in the last hour. There are some claims that generative AI, Chuck, as you point out, will boost GDP to the tune of, and this is on the astronomically high end, over a percentage point
These are not my
year
claims.
over the next. Now, this is Goldman specifically. A paper came out from an academic at MIT recently, and he poured a great deal. This is one of the most esteemed minds in the field right now, for what it's worth. Poured a great deal of cold water on some of the more optimistic AI estimates. You've got Goldman and other investment banks who are always trying to sell us something, so you have to take what they say with somewhat of a grain of salt.
Yes.
Thinking AI could boost gross domestic product, GDP, how we measure output in goods and services, on the order of 1% or even more a year. That would be big because potential GDP is only about 2%, so we're talking about a 50% increase. This particular economist, again, one guy, but eminent, has it closer to a tenth or less. His estimates are actually less than a tenth a year, so imperceptible. What I'm trying to say is estimates are all over the place, but
no one knows.
Some of the more objective ones issued by preeminent experts are on the very low end of the boost that AI could provide to growth. So it ain't going to bail us out, I guess, is the upshot here.
Did either of you happen to watch the rocket launch this morning?
I just saw it was occurring. I didn't really fully pay attention to it.
The first successful crewed launch of the Boeing Starliner has made it into space, just inner space, not outer space yet. But this was a capsule that was put atop an Atlas V rocket, and they launched into space about 15 minutes ago. And so it's en route to the International Space Station carrying 2 NASA astronauts. And this is part of NASA's big plan to stop producing its own crewed vehicles and instead rely on third parties to send NASA astronauts to the International Space Station, maybe the moon, maybe Mars, who knows? So
hopefully it'll be cheaper and more, like the space shuttle was originally, this is not my area, but I remember it being hyped as a space bus.
Right.
They projected like 2 missions a month once this thing got up and running.
They could just never get it there.
And it just, for obvious reasons, a really complex piece of technology. Still probably, maybe worth it in terms of, I don't know, morale or something, and learned what was not feasible. But the fantasy has always been a reusable, dependable vehicle. As I understand it.
Yeah. So
and we've just not gotten there.
So this will be interesting to see, kind of how this progresses from here. But as of right now, those 2 astronauts are on the way to the International Space Station, and a fantastic start to the first crewed launch for the Boeing Starliner.
I think, for those of us who grew up watching shuttle launches from the first one in like 81, whenever it was Columbia went up.
My parents took me to watch one when I was a kid.
Did they really? That must have been an awesome experience.
Well, it would have been, except it rained, and so they postponed it from the day that we were in Cape Canaveral, so we couldn't actually see it there. So being the enterprising young, 8-year-old that I was, I made them wake up so we could watch it at 2 a.m. on TV, even though we weren't there anymore, but I was just so hyped for it at that point.
Well, they wound you up, so
they did.
They really had
it's
it
entirely
coming.
their fault. Entirely their fault.
But for those of us who grew up watching those, this seems anticlimactic. This seems like even though it isn't, this is a very unsophisticated view. Putting a capsule on top of a rocket seems very 1960s, and that's basically all this is. So after seeing those space shuttles re-enter and land, and oh my God, it's reusable, and it looked cool.
Totally.
It looks like the ones in Moonraker for James Bond fans out there. This seems like a regression.
Right.
Even though it isn't.
You figured we'd have the first version of the Starship Enterprise by now.
Exactly.
Where's warp
this
speed
seems like a
for us?
letdown.
How come I can't warp anywhere?
Because the Starliner is it's not a star. Is that what they're calling this rocket? Okay, it's not a Starliner. It's a capsule on top of
two-person.
Looks like a mushroom.
I saw the inside of it.
It's not impressive, Chuck.
Their face
right?
is 8 inches from the screen.
No
right?
offense.
There's not much space there.
It's not impressive, right? Relative to the space shuttle.
No, I mean, look. Ultimately, it looks like the Apollo capsule with nicer
That's
screens.
what I mean. This feels like 1960s tech, even though
it's
it
way
isn't.
better, obviously. Again, my phone has more computing power than
optically.
Yes.
I feel like this is a regression, and therefore I glanced at the screen. The headline said Boeing launches Starliner. I looked at the thing. It looked like something out of a 60s, broadcast or film, and I kind of looked away. Like, I don't know.
So, if you want something that might excite you, then
just make it look like a TIE fighter or something. Is what I'm saying.
I don't think that's the most aerodynamic for leaving Earth orbit. I think that's
you don't
the
need
problem.
It's fold up the
whole
whatever those panels are.
Well,
fold them up.
So those are the twin ion engines. Hence, TIE fighter. TIE stands for twin ion engine.
I had no idea. Wow,
it's coming out now.
Stupidest thing
that's what it stands for. It's not because it looks like a bow tie.
Twin ion engine.
Twin ion engine.
I had
TIE
no
fighter.
idea.
There you go.
Yeah.
Archer,
convenient that they use English acronyms.
Well, the Empire obviously was British.
Right.
I want to talk. Let's talk. I'm gonna just sticking with things that look cool. I guess Archer Air. They're one of the companies trying to build these air taxis. Right. Helicopters, but not. You're terrified by these, aren't you?
If the same standards that go into running the taxis that I've patronized in the past, go ahead, Chuck. I don't want to prejudge.
I'll quote here from this is from Airline Magazine. Archer Aviation received a certification from the U.S. FAA to operate as a commercial airline. So they are kind of passing some of these additional hurdles. They have a partnership with United in order to try to market this under United's umbrella. And they've said now that they think they may be able to have these operational in select areas by 2025 or 2026, which are the next couple of years. So I've long been skeptical on this kind of stuff just because I look at it and I say, okay, we can build helicopters now, but they're very cost prohibitive to operate.
Yeah,
they are not nearly as safe as commercial fixed wing aircraft. There's a reason why we're not just taking helicopter flights everywhere. How is this going to be any different? And I've yet to be convinced on that piece, but these things do look cool because they basically have, a bunch of different, kind of drone-like engines that keep the thing whirring above the ground, but
I'd probably pay more attention to the takeoff of one of those than I would to this Starliner launch today. If I saw one of those leaving from the helipad or whatever they call the top of a building, I'd be mesmerized by that because, to your point, they look neat.
The other piece that is, I guess, interesting about this is these are all battery powered, so they're all electric. There is no gas, or I guess for planes it's not gas, it's
you manage
kerosene.
lightning strikes when it's all. I'm sure they've got it all figured out. I don't know what I'm talking about.
It's a good question, but the counter to that is that the Boeing 787 has a massive lithium-ion battery that powers a lot of its electrical systems, and they haven't had issues with that other than when they were first catching on fire when they started making them. But that was not related to lightning strikes. That was just, hey, you put a bunch of lithium-ion batteries in an airplane, and you got to make sure they don't catch on fire, which they didn't at first.
That concludes the nerdiest segment of all time on the Financial Exchange. Thanks, everybody.
To those of you who are still listening,
bunch of nerds.
I don't understand the problem. I bet that was our highest listened segment of the month.
Oh, God.
I think that was a fantastic segment.
For the nerds.
Okay, let's cover what's inflation going to do for the 43rd time. You know, like, come on. We got to do one of those a month at least. Let's take a quick break. When we come back, we've got trivia for the three of you who are still listening. And then we'll talk about why Americans have more investment income than ever before.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Taxation is a critically important element to be aware of when you're building your estate plan, especially when it comes to understanding inherited IRAs. The tax treatment of these accounts depends on a variety of factors, including the specific type of IRA, the relationship between the deceased and the beneficiary, and the beneficiary's personal circumstances. In this month's new free guide from the Armstrong Advisory Group called The Complexities of Inherited IRAs, will help you understand the possible tax complications you could face when inheriting an IRA. Plus, we'll walk you through the recent changes to federal rules regarding these accounts. Get your free guide today by calling 800-393-4001, 800-393-4001, or you can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating a trust is oftentimes the first step in the estate planning process. It helps you prepare for the unknown as well as the inevitable. Revocable and irrevocable trusts are the most common types of trusts, but there are significant differences between the two. So before you make that crucial decision, call Cushing Dolan at 866-848-5699. Ask for their new guide called The Difference Between Revocable and Irrevocable Trusts. Let them help you understand which may be right for you and your family and protect the wealth that you've achieved throughout your working years. Protecting your assets is paramount to being able to enjoy your retirement years. So call right now, 866-848-5699, and get your free guide today. Give yourself the peace of mind you need as you build your estate plan. Again, that number is 866-848-5699, or request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John. Enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's usvi.com. Well, it's time for trivia here on the Financial Exchange, and we're going to continue to go back to the fourth grade to look at state capitals because they have, quite frankly, escaped my brain. Trivia question today: what is the easternmost state capital? Once again, what is the easternmost state capital? Be the eighth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. That's 617-362-1385, and the eighth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mark, there's a piece in the Wall Street Journal. It's titled, Americans Have More Investment Income Than Ever Before. What are we talking about here? Do they actually?
Well, interest rates have gone up. We all know this. If you have a money market fund, you got a big tax bill last year, and you might be paying estimated taxes this year. So I think anybody with invested cash, not invested in a bank account, a fallow savings account, God forbid, but anything interest-bearing, recognizes that there's an upside, I guess, to the Fed's fight against inflation, which is higher interest income than we've seen in a generation, and higher bond income, too. The losses have obscured that, the capital losses that we've incurred because bond prices have gone down, yields have gone up. You make that up over time in theory. Bonds are pretty mechanical. But yeah, shorter-term fixed income especially, which is less volatile, has been rewarding for the first time in as long as anybody can remember.
Yeah, the data here is that according to the Commerce Department, Americans in the first quarter earned about $3.7 trillion from interest and dividends at a seasonally adjusted rate. That's up $770 billion from 4 years earlier. So in terms of like the actual dollar value or percentage-wise, you're talking about a 25% bump in income from interest and dividends compared to the same time in 2020 when interest rates were much lower.
I overlook dividends because dividend yields are so low because stock prices are high. But yeah, great
Even
point.
Dividends are still being hiked, on a pretty regular basis by a large number of companies.
It's just that their stocks are growing so fast that their yields look paltry.
Yeah.
But in an absolute sense, dividend yields are low, but dividends are high. Yeah, good point.
So this is something that one of the points this piece makes is that, look, if there's more income that's coming off of these investment instruments, it's a little bit tougher for the Fed to fight inflation because that income is feeding into the economy and it's not measured in terms of wages or anything like that. Is that a reasonable concern in your opinion, Mark?
I think that the effect of that is that gets a little bit close to this school. I'll call it a school of thought, even though it doesn't have a coherent framework that's testable the way economists like to test things, but so-called modern monetary theory. We've probably all heard that.
Yeah, it's MMT-ish.
Yeah, it is a little bit like you actually raise interest rates to stimulate economic growth and lower that. They don't go that far, but it's a logical next step in their argument. So that sounds a little too flaky to me, but undoubtedly it's true for some people. But overall, the effect is the effect of hiking interest rates is contractionary. It curbs demand and slows growth. But yeah, there's some stimulative, no doubt, effect as a result. It's just overwhelmed by the other factors.
Let's talk about a piece from CNBC talking about how the job market is getting more competitive and loosening up a little bit after, years now of historic tightness in the labor market. You're starting to see some signs that the balance of power is now looking a lot more like it was pre-pandemic, as opposed to the post-pandemic era, which largely has been dominated by employees having the lion's share of negotiating leverage.
Unemployment, we just went through this off air. Unemployment is ticked up.
I know, we really should have
Payrolls
been on air then.
have, yeah, we were unusually sharp. I'm sorry you all missed that.
Yeah.
Unemployment has ticked up a little bit. Payroll growth has slowed a little bit. First-time claims have ticked up. I'm mixing coincident and lagging indicators, forgive me. But the story is pretty clear. Yesterday, we learned that vacancies declined. The number of jobs posted, job openings has declined, and job openings relative to unemployed people, that ratio that was getting a lot of press a year ago when everybody was trying to figure out what the heck was going on with inflation. That's come down, Chuck, as you pointed out during the break, to pre-COVID levels. So it's normalization is a slippery word, but probably the right word to describe what the data are, what these measures that we're getting from government agencies month to month are pointing to. We'll need a little bit more to be sure, but it doesn't feel as hot as it did, say, 6 months ago or even 3 months ago, which is good news for the Fed's fight against inflation, bad news for economic growth. We'll see if people are willing to incur the economic pain that's historically accompanied getting inflation down to a stable background noise type level.
Taking a quick look at markets as we head towards the bottom of the hour, the Dow is now in positive territory, up 17 points. S&P up 0.2% or 35 points, and the Nasdaq up 218 points or 1.3% at the moment as
Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky with the law firm of Cushing Dolan with your Financial Exchange quick tip of the day. And today we're talking about the differences between revocable and irrevocable trusts. Todd, is there a difference in the taxation of a revocable trust versus an irrevocable trust, and any difference in how you would file your income taxes?
So surprisingly, a lot of you might say, well, yeah, there should be a difference. And there is, but there really isn't. So let me explain. With a revocable trust, everything that you've put in it is going to be titled under your Social Security number, like bank accounts and brokerage accounts, etc. Whereas items that you put into an irrevocable trust, like bank accounts and brokerage accounts or rental properties, those accounts would be set up under a tax ID number for the trust. So the trust now does need to file its own tax return. It's called a Form 1041. However, these Medicaid trusts are designed by us to make them grantor trusts for income tax purposes, which means you are the owner for income tax purposes, and all the income and gain gets reported on your personal return. So while you're filing a separate return for the irrevocable trust, you're paying exactly the same tax at your own rate, just like you did before the trust and just like you would with a revocable trust.
Well, the estate planning experts at Cushing Dolan have written a brand new guide that will help you answer the most common questions you have about the differences between revocable and irrevocable trusts. You can request this brand new guide by calling 866-848-5699. That's 848-5699, or you can also request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Taxation is a critically important element to be aware of when you're building your estate plan, especially when it comes to understanding inherited IRAs. The tax treatment of these accounts depends on a variety of factors, including the specific type of IRA, the relationship between the deceased and the beneficiary, and the beneficiary's personal circumstances. In this month's new free guide from the Armstrong Advisory Group called The Complexities of Inherited IRAs, we'll help you understand the possible tax complications you could could face when inheriting an IRA. Plus, we'll walk you through the recent changes to federal rules regarding these accounts. Get your free guide today by calling 800-393-4001. 800-393-4001, or you can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing Dolan. Cushing Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
All right, today's trivia question was, what is the easternmost state capital? That would be Augusta, Maine. Boston would be second, followed by Providence. Winner today of the Financial Exchange Show t-shirt was Hugh from Feeding Hills, Mass. And we play trivia every day here on the Financial Exchange. Tune in tomorrow for your chance to win. See complete contest rules at financialexchangeshow.com.
It's one of those states that does not have their largest city as the capital city, which always confuses me.
Because Portland's bigger?
Yeah.
Okay, obviously.
Always confuses me.
No, Mark, because Portland's hotter. Yeah, obviously.
The most obvious one, the most confusing one is New York. Albany? What are we doing here? How's it not New York City?
I don't know. When was it made the capital of the... Because
it's a good question.
Because it was a Dutch, right? The Dutch had what we call New York City. It was New Amsterdam, right? It was a Dutch settlement at first, and then the Brits took it over sometime around.
So Albany became
late
the capital.
1600s.
Albany became the capital of New York in 1797.
Oh, so far later.
And it is.
Was it just more central at the time? No, that sounds ridiculous.
Not really.
The
New York
center
was
of mass
the center
was
of
always
trade,
farther.
yeah,
there was no reason to. Is it on a canal or something? No, it wouldn't have been easier to
It
access
moved
than Manhattan.
permanently there. Why is it the case? I can't find anything on it. If anyone has any information on why Albany is the capital of New York,
please text us immediately.
Text us at 617-362-1385 because I'm not getting it.
These things all have their own quirky rationales.
Well, here's the thing. Some of them you can look at and just kind of figure out, okay, this is the, this is why this works here. Augusta, Maine, just as an example, you kind of sit there and you say, yeah, it's kind of right in the middle of the state. If you had to build a center of gravity for Maine, it's basically Augusta. It's kind of that bridge between southern Maine and northern Maine, in my opinion. You cross Augusta, you're into, I know everyone from Maine won't say that. They'll say, no, you don't really cross. If you're from Maine, it's probably Bangor. But as someone from Massachusetts, Augusta is the border between northern and southern Maine to me, in my opinion. It makes sense. It's kind of the center of gravity for the state. So I understand that, especially in a day and age where, hey, it might take days to cross that terrain back in the 1800s. Totally get it. New York City has always been the center of gravity for New York. Always. What are you doing putting it in Augusta? I'm sorry,
we
in
just
Albany.
say 1797.
I guess. Look,
Were there
Albany.
a lot
okay,
of,
I guess if you want to do the same thing there, You could probably make a case for Albany, but even there, you probably say Syracuse is really the center of gravity in terms of the least distance to travel on average for everyone.
The only thing I can think of is that maybe New York City was occupied for most of the Revolutionary War, right? They didn't vacate. They didn't evacuate. Like here, they evacuated early, but so maybe there were a lot of Tories in the city. There was a colonial, there was a continental government
I can see that.
in Albany, and Albany said, it's like, if you think about Vichy France versus in our era, or my era, or whatever. That's nobody who's listening's era, probably. But anyway,
probably
maybe
some people who are listening.
Yeah, but you know what I mean. You had these dual capitals in wartime, and the winners kept the designation.
Great segue here into commute times and talking
it's really
about how
perfect on my part.
I think it actually is.
Take us down that rabbit hole.
No, we talked about how it's a long
It's
way to
not
get
a
to these
convenient
places.
commute.
America's commute to work is getting longer. This is according to data from Stanford University. So the share of super commutes, those 75 miles or longer, have grown the most and are up by nearly a third since 2020. So you're seeing Americans that are commuting longer and longer distances. And the question is, why? And I think it's twofold. The first is you still have a large number of white-collar jobs that are able to be offered at least some kind of hybrid commuting schedule. And so if you don't have to do it 5 days a week, it's more palatable. The second piece is that if you look at the cost of living around a lot of these major city centers, it's ridiculous trying to buy a place there.
Yeah.
The Boston area is an example. You try to buy a place inside $495, good luck. A lot of people can't afford it, and so they start looking outside, and they say, yeah, I'll deal with the longer commute. You look at New Hampshire, and you say, look, if I'm commuting into the Portsmouth area, or if I'm commuting into Manchester or something like that, a lot of those areas around there, Bedford, Goffstown, they're very expensive. It gets tough to do. Same thing in Maine. You look at the areas around Portland, Maine, and say, hey, how expensive is it for me to live in Falmouth, or how expensive is it for me to live in Westbrook? Some of these areas you say, yeah, it's not the cheapest area because it's very desirable. And so people start looking further and further away on their commutes. And I think the combination of home prices and hybrid work availability in a lot of white collar jobs is absolutely driving this trend.
Yeah, there was a big shift in preferences during the pandemic. People decided they were willing to accept that trade-off, and remote work or partial remote schedules give people that flexibility to their stories.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean, world-class cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
The one state capital that really bothers me is Juneau, Alaska. Juneau, Alaska. So the other ones that are, smaller than the largest city, you can make a case like, oh, it's centrally located, easy to access. You can't drive to Juneau, Alaska. The only ways to get there are by boat or by plane, I believe. 41% of Alaska's population lives in Anchorage, and it's not the capital. What are we doing here? What are we doing here? To all our Alaska listeners, please text us at 617-362-1385.
Somebody texted in, the reason the smaller cities are often capitals is because they don't want the large cities to control the economy as well as the government. This is often the cry from Western Mass residents because Boston has both.
What if we move the capital to Worcester?
Yeah, that would go over well,
I think it'd be fine.
Who would be upset by that?
I don't know. I think we go great, quite honestly. Worcester's a town on the come up, by the way.
It is. That's what I hear.
This explanation, thanks for texting it in, but it's vague and it doesn't explain. My guess is we've had other texters someone by the name of Bran Crunch, I assume that's a pseudonym, point out they texted us several paragraphs, obviously frustrated with my flailing around trying to explain why Albany's the capital of New York. They cite geographic factors, trade-related factors, proximity to the Erie Canal, things that make sense. The explanation provided by the last texter, I don't know if I'm buying it. The political explanation.
Sure.
I mean, cities fluctuate in size, and I suppose political, I'll just call it rivalry, might be part of an explanation, but probably isn't. This is just intuition. I don't really know. Probably not the major explanation.
Another one that's always just surprising to me, Florida. What's the largest city in Florida? Anyone?
Miami, I guess.
Jacksonville.
Jacksonville.
Is bigger?
Population in Jacksonville is twice as big as Miami. Wow. 990,000 in 2024 versus 456 for Miami. And the capital...
Jax is big, yeah.
The capital of Florida? Tallahassee, the 9th biggest city in Florida.
Today,
yes. But again, just another one that kind of grinds my gears a little bit. Speaking of grinding my gears, in today's fear-mongering piece of the day, quote, Americans with adjustable rate mortgages could soon see their payments skyrocket. Since 2019, more than 1.9 million homes have been bought using adjustable rate mortgages, which initially offer a lower, more affordable interest rate. But eventually, ARMs reset to an unknown future rate, meaning there's a high degree of uncertainty for individuals who take on these types of loans. So, a few different things on this. First, just because you take out an adjustable rate mortgage doesn't mean you're necessarily still in one right now. If you took one out in 2019, pretty good chance that you refied into a 30-year fixed rate in 2020 or 21 when rates dropped even lower.
That's supposed to be the strategy, right?
Correct. Second piece on this. This is not any kind of threat to the overall U.S. economy, because the percentage of mortgages that are adjustable rates and that have been for the last 5-6 years is in the low single digits, anywhere between like 2 and 6% depending on the year. Whereas back in 2003 through 2007, when we were sowing the seeds of the financial crisis, close to 40% of mortgages being taken out were adjustable rate mortgages, and the amount of leverage that was allowed on them was also far higher than is allowed today. So while this might be a challenging thing on a personal level for a number of families who may be coming up on one of those adjustment resets, it's not something that is likely going to be a systemic threat to the U.S. economy in any way, shape, or form.
They're supposed to be used, again, opportunistically. You're supposed to get in,
ARMs.
You wait until rates you think bottom out, longer-term rates, and then you switch.
I've used them on a number of occasions. In 2015 when I refied, I used one. I used another one in 2017 buying a place, and another one in 2020 refiing. So I've used them in a number of different cases, and ultimately the end goal is, yes, you need to refi out so that you can lock your rate in over a longer term. You don't want to be stuck in an adjustable for 30 years, actually.
Right.
Let's take a quick break here. When we come back, Stack Roulette.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com. Creating a trust is oftentimes the first step in the estate planning process. It helps you prepare for the unknown as well as the inevitable. Revocable and irrevocable trusts are the most common types of trusts, but there are significant differences between the two. So before you make that crucial decision, call Cushing Dolan at 866-848-5699. Ask for their new guide called The Difference Between Revocable and Irrevocable Trusts. Let them help you understand which may be right for you and your family and protect the wealth that you've achieved throughout your working years. Protecting your assets is paramount to being able to enjoy your retirement years. So call right now, 866-848-5699, and get your free guide today. Give yourself the peace of mind you need as you build your estate plan. Again, that number is 866-848-5699, or request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, Mark, what do you have for me for Stack Roulette?
If you've bought a car in the last few years and you use the app provided by the manufacturer to, say, track service milestones, stuff like that, they're collecting that data. They may be collecting data on your driving habits. And if you let the app track more broadly, they could be spying. It's a nefarious way to put it, but it's an unseemly way to put it, but it's probably accurate on your other activities.
What kind of other activities?
Wall Street, they don't really specify. So there's a little bit of fear-mongering, to use your phrase from earlier here, but mainly driving habits, I guess. And it's not clear that you can opt out of this type of tracking. Some of these apps and the technology built into cars apparently don't give you the option to. So the Wall Street Journal, which is where I'm getting some of this kind of vague information from, advises you to, before driving, common sense, I guess, before buying, ask what data is tracked and how it's used, and if you can opt out. Not something I would have thought to do necessarily, but having bought a car in the past couple of years, but in retrospect, maybe I should have.
It's interesting. So I leased a vehicle in October of last year, and it's a Subaru. And you actually cannot use the Subaru app for your vehicle in Massachusetts because the Massachusetts right to repair law, Subaru decided, no, we don't want to be having that data potentially available to third parties. And so it's actually not available for any Subaru that is sold in the state of Massachusetts. So I don't even have the choice. Like again, ultimately, I wouldn't really want it, but I cannot access the Subaru app. If I look on my dash, it's called the Starlink system. It's disabled there. You can't access it for the vehicle. It's disabled at the vehicle level for any of them sold in Massachusetts.
I mean, I don't get all hot and bothered over data sharing, maybe because I don't do enough interesting stuff and I'm not viewed as a good candidate to inundate with advertisements. But I generally think it's helpful to have to share data with the auto manufacturer. It helps them improve products and maybe offer specific, service promotions to me. So I've not taken the time. I drive a Volkswagen. I haven't taken the time to disable anything on the app. I generally find it helpful to be able to, for example, lock my doors remotely or check on service milestones.
The one that I know has come up is people that get upset that data is being shared with insurance companies for their pricing and rating. And two things, like number one, okay, it's just telling you that you're a bad driver. Like that's all it really is, first of all. But the other piece that I've said before is, look, if that's, the case, you should be able to opt out of that on an annual basis. You shouldn't be able to do it whenever you choose, because then it's, kind of choosing, I'm going to drive well while I'm on this or not, like you shouldn't be able to turn that off on a daily basis. But if you say, yep, for calendar year 2022 or whatever, 24, I don't want my, driving to be tracked, fine. Like I don't see a problem with that either, as long as there are opt-out features available.
Yeah, and I wouldn't be surprised if insurance companies eventually charged more to people who opt out because they're self-selecting as bad drivers or paranoid people.
Mark, when you make a big purchase, not a car necessarily, but something that you define as a big purchase, what is the mechanism that you use to make that purchase? Is it going into the store?
Could you be more specific?
Is it going into the store? Is it mobile? Is it on your computer? What's your preferred way of...
I think I go mobile first. I check prices on Amazon and then Target.
And then you'll complete the transaction on mobile?
Often, yeah.
Tucker, what about you? Big purchases too. I'm not socks.
If it's a big purchase, I kind of tend to buckle down and get in front of a laptop and have a credit card right next to me and everything like that. But if it's for a smaller purchase, I'll just do the mobile.
What do you mean, like a major appliance or something?
Like a piece of furniture or something.
Oh, furniture is that you do.
Furniture, you got to sit on it first. Even if it's a grill, you got to sit on it. Grill's not really furniture, is it? It's an appliance.
No, it's an appliance.
If it's a table, you got to sit. Like furniture, you got to actually feel. I know we were talking, Mark, you were on the air when we were talking about the company that was trying to develop the ability to feel products through your phone. Were you there for that, or was that something else?
I would remember that uncomfortable reaction.
There's some company that's trying to bring this haptic touch sense to phones where you could feel a fabric or feel a dog or something through your phone vibrating a certain way. And
okay.
The premise being that you don't need to go into the showroom in order to see the couch or touch the different fabrics. Like you don't need a fabric book. We can just make your phone feel different.
Are these briefs too tight? I don't know.
So here,
I don't know.
My two things on this were
put my phone in my pants and. Well, I mean, some things you. I don't know how that would be. No, Chuck, I'm asking a question. I'm not trying to be comical.
I get
it's not my area.
The two things that are interesting on this. The first is, on one level, you sit there and you go, oh, that'd be kind of impressive in a weird way to be able to do that.
I'm intrigued and
the
disgusted
second piece
at the same time.
If you're a talented enough engineer to do that, how is that what you chose to do with your life? The counterpoint to that is, how is this what I chose to do with my life? And we're all here. Yeah,
go work on the Starliner.
I'll go work on TIE fighters.
Oh, I'm not you, the engineer.
Oh,
no,
yeah.
I definitely need you here.
Let's take a quick break for the next 22 hours. We'll be back tomorrow, though, on Thursday. We're going to be previewing tomorrow's, or rather Friday's, jobs report that is going to be due out. Big one. And then we also have jobless claims coming out tomorrow as well. So big show tomorrow on the Financial Exchange.